Hello, Warriors. How's everyone doing today? We begin the employment saga with ADP. How's it going, Ingmar? Bran? Okay, yeah, I have some sinus problems handling that, buddy. AJ, hi, Ryan and Kay, James, Paul, AJ, Laura, how are you? Patrick, Vlatko, welcome to Face. I believe you're new. You found the right place. Marcus Tommen, same to you. Okay, everyone. So, yeah, Blake, yeah, here we go. All right, so I thought I'd start off with the dollar, and 102 was an important level, close to 102. We got there. I think there's a chance that we get something like this from around here before we go for new lows. So quality is about 140. So 140 from here, then take it to 102.50, which is a target for shorts. So we'll see if ADP gives the first hint that employment isn't that terrible. Um, One thing I have to say about especially NASDAQ, yesterday was not much of a recovery in either of them. Okay, but still that 5,500 level is important in S&Ps. So I mean, looks vulnerable, but they get some real weak job numbers, and the market starts really feeling confident about a 50% cut. Maybe we rally, but look at this 5,100 level. It's big. Okay, so it just sat. It's just sitting on there. Underneath it, there's a lot of air. So that's an area to pay attention to. Gold's trying to make a new high here, not that far away. It won't confirm. Silver, kind of held. I talked about 28 being a buy zone. Maybe we're on our way in the metals too. But if I'm right about one more rally in the dollar, perhaps the metals pull back one more time. So we have the whole team here, guys. Everyone's here.
So,
So why don't
so
we
Dale,
start?
Dale,
Yeah,
Dale, I wanted to ask you real quick. So you think the dollar is going to get one more rally? I mean, we got a lot of data between today and tomorrow that could do that. I mean,
right.
after yesterday's data, the yesterday's data really put the kibosh on the dollar. I mean, it
Yeah.
actually, I've seen a lot of economists that are like, I don't really care what happens on Friday. The Fed
Oh,
should
okay.
deliver 50%, a 50 basis point cut no matter what. I've seen multiple economists say that because of the beige book yesterday,
Yeah,
which cited so much, regional weakness. And then you got
yeah.
the JOLTS data. Like it doesn't even matter now. The market's like, the Fed's got to deliver. Anyway,
Anyway,
that's
I
why
don't think the Fed will.
you
Maybe
don't
they
think they
should.
will? Okay.
I don't think they will. They'll give them a quarter. Okay.
And
I
if they
don't think.
do, the dollar will scream. I mean, there's no doubt about that.
Yeah, I think it'd be a disappointment for the market too, for a risk, because they're
Do you?
counting on it. They're counting on it, Blake. All right. So, and the more people scream about it, the more disappointed they're going to be if they only get a quarter. And the market, if we get good jobs numbers in the next couple days, the people screaming for a half will, scream in vain, I think. So um, I think that's what's set up for the next couple days. If we get decent job numbers, that the 50% cut expectation will look like it's going to be harder to fulfill. And I just don't see um, Powell is kind of a gradualist, and that would show some panic. And in his last press conference, he's talking about easing because of the employment picture, but no panic. Uh, you know, he talked about the things in the economy that were doing okay too. So we'll see.
Yeah.
But I'm just technically, it looks like that could happen. All right, that we could have an ABC. We've come a long way. It's not much of a correction to look for 250 after, we've gone basically from 107. This was 700 points. So that would be, about 38%, right? Up here, maybe less, maybe it's only 23, but I think there's a chance for that to happen.
Yeah, I would be. It would be absolutely at this point in time, and especially after we get past this next couple of days worth of data, it would be a shocker for the market to get a quarter. And if that happened, yeah, I know it should be interesting. It would be it would
Yeah,
definitely kick
and
around the
also,
markets.
I don't hear any bearishness. There's still a lot of calm in the S&Ps, in risk, still, a lot of complacency. I don't hear any bears, even though we had this big down day. I think people are still pretty complacent. I don't believe the bear case. Okay.
Yeah.
And I'm in it. Okay. And I still don't believe, I'm just waiting for it to stop working, because of, just recency bias over the last decade.
Yeah.
So anyway, we'll see what happens. But I don't think, I think yesterday was kind of telling. When the market's good, um, we could have had a better reaction off major support than what we've had so far. Don't you think? I mean, that's not much of a bounce. It didn't even bounce yet.
No, and I think people are a little stunned just ahead of obviously this week's data, and then we have CPI next week, and then we have the Fed. So I think everybody's just kind of a little definitely worried about this week's jobs data. And I will let Ryan chime in here because we just got the Challenger layoffs data that just came out. And by the way, we do have ADP data in about 8 minutes from right now, and that
Oh,
we'll
okay.
need to cover live. So just,
Go ahead.
but maybe Ryan can give us a little flavor and color on what we just got.
What from the Challenger numbers? The
Yes,
layoff
sir.
numbers?
Good morning.
Yeah, there was a bit of a big jump, 75,000 from 25,000 last month. But looking into the data, it looks a bit like it's just normal attrition. There's always layoffs, there's always hiring. So the standout item though was they said that job hiring had slowed to the slowest since they started to report in 2005. So that's evident that we are seeing a slowing jobs market, but nothing in the report said they're seeing widespread job losses. So obviously that's the more negative step. So the report falls in line with what we know from the jobs market, what we know from various Fed heads talking about their regions, that firms are slowing hiring, but there isn't any big layoffs happening just yet. So that keeps a soft landing and keeps a 50 pip hike off the table if that continues.
Yeah, it's a 50-point hike is off the
Cut.
table.
Sorry, I've got
All right.
hike on the
Well,
brain.
I thought, maybe you might be right. Maybe the Fed's going to
I was
tighten.
like, wait, did I need more coffee? I need more coffee.
Yeah, no, it's all right. You never know.
Hey,
Paul might wake up on the wrong side of the bed.
you,
Tighten a quarter.
you
So
know what?
anyway,
Well. Speaking of which, something that was kind of crazy is Bullock. She was speaking last night, and she's like pretty. She seems pretty.
hawkish.
Yeah, she's not hinting the fact that Australia's got to be cutting anytime soon, right? Right? Isn't that what I read that overnight? Is that correct?
Yeah, but Bullock talking bollocks as usual. That the RBA, one of the worst banks for forecasting what their rates do. They weren't supposed to be hiking until 2024, remember? And here we are. They hiked 2 years before that forecast. So
The best comment I ever heard on the Fed was during an interview with trader Vic Sperando. He used to be famous, like Jim Welsh and me, us old timers. And I asked him, I said, so Vic, do you think the Fed is making a policy error? And he said to me, Dale, the Fed always makes policy errors.
He's right.
Okay, so I mean that's a guy who's been around a long time, seen a lot of different Fed chairmen and stuff. So anyway, we'll see. Yeah, most people are saying he's behind the curve, right? The guys that are looking for a half, he's already behind the curve.
Well,
So
Dale, I'm gonna, if you don't
yeah,
mind, I'm gonna
grab him.
take over the charts just because we got ADP coming up. But real quick, since we haven't heard from him, let's hear from Kman. Kman, what do you see is going on? What's in your view as we head into today's data mania that we've got going on?
Well, we are at relatively interesting levels in a couple of currencies. Cable around the 131.75. Obviously, euro dollar 112. They're all like somewhere in the middle of the retracements that we've seen since we did the lows on the dollar. And so I'd say like a ball in the middle, and let's see who kicks in the next goal. Yeah, gold, I think, is encouraging because we did hold that pretty decent support. So that's not going to need too much of negative data, I reckon, to go through, at least to have a look at 25.5.
I mean, that was really important
Good
support that
hold.
was held
Very
yesterday,
nice hold.
right?
Yeah, very nice hold. Been showing that for ages, that zone. So
Yeah.
no, it's a very good hold. And I kind of like it. And the other thing is that we've seen a delayed impact. So yesterday we didn't really react straight away to what's happening in Mexico, but I think today the Mexican peso is under the cush, and that's the one that is like. I think whatever happens elsewhere, the investors don't like this. So whether it's versus dollar or versus anything else, it's probably still going to weaken, no?
The EURMXN, this is a massive break.
Yeah,
This is a big one that if you guys didn't catch, I know a few of us are long this from yesterday, and it is breaking out today. So it looks like it could really squeeze. I mean, it's nasty. Tell us a little bit about what's happening in Mexico that's freaking investors out while I get ready for the ADP data.
Well, yeah, it's basically that they are changing the judicial system instead of having like the judges being put in place by government or other instances. They are going to open the vote to public, and the investors really fear that it's going to bring cartels and whoever else back into play, watering down the whole system. And there's already protests going on as well over there. So that's really, I mean, what bothering investors.
Yeah, I mean you open up the judicial system to corruption big time by doing that, and that's freaking some people out. So thank you, Kman. We have about less than 2 minutes before this data comes out. I want to mention, because I know we have a lot of listeners in today. Dale, what time is your guest come on? Anasi comes on in about 15 minutes. So just if you guys are waiting for him. He's got a great guest to have, especially with crude oil in the toilet right now.
Yeah, we have a lot of great guests.
You actually bring in awesome, great guests. No, I mean, I meant to say that the timing was great.
Yeah,
timing,
I know.
Timing just happened to work out really well, especially with the breakdown in crude that we've seen the last couple of days.
Yeah,
so
maybe we could get an explanation from Anas on that strange situation that happened in Libya. That they stopped producing because of an issue with their central bank, which is something in the energy patch I've never heard of before.
Yeah, no,
I mean, can you imagine that we stop pumping oil because they don't like what the Fed is doing? I mean, it's crazy, isn't it?
Yeah, well, that's
the times.
definitely
The
a sign of the
times
times.
they are a changing.
All right, guys, just so you can see off to the left, we have the dollar index here. We have the S&P right in the middle. We have 10-year yields over to the right. You can see all the currency pairs. We should get a pretty decent reaction. It takes a little bit of the shine off the NFP. Market's looking for about 140, 150,000 private jobs. So data is coming out right now. Here it goes. 5 seconds. Stand by.
Ooh.
And Ryan's got Ryan should
99.
99.
Whoa, that's not good. Very,
99 red balloons. There's a song for you, Dale.
yeah, there you go.
99 bottles of beer on the wall.
99. So by the way, that data flash comes in with ForexAnalytix, just so you guys can see that. I bet gold spiking on that just a little. It did tick higher, I guess.
I
So the
noticed the
dollar's
S&Ps didn't like it.
yeah,
Did they
well,
like?
it's weak data, right? It's like
Yeah, so now weak data is weak data. That's interesting. I mean, you never know. It's changing, right? Weak data used to be bullish because it meant the Fed was going to ease, right?
yeah, but now it's like, why are they easing? So if they're easing
Yeah.
because economic data is slowing, that's not so much a good thing. So hey, real quick, I just want to talk about this really fast. We have a lot of important data coming out over the next 24 hours. So lots of important data, lots of stuff that could move the market. And remember, we will be covering it live here on the F.A.C.E show. So make sure you guys are around for that. Not only today, but tomorrow we'll do non-farm payrolls. We do every day. And we've been doing it for 8 years, Dale. 8
Yeah.
years. If you guys don't know, we're having an 8-year anniversary sale. This is the lowest
Yeah,
prices that
good
we bring in
segue.
ForexAnalytix. If you don't get the prices now, you will not see them for months and months and months. So I know people want to be inside of our community and be seeing things like this from a mirror, talking about how funny it is that the pig didn't wear sunscreen, turn into bacon. No, we literally joke around about other things too, other than just the markets. But you can see we're talking about what's moving in the markets and what is, what's happening. And there's Bran actually talking about that key 50% retracement in the cable just a little bit ago. So make sure you jump in our community because we are talking about markets and everything that's moving all the time. You want to have direct access to myself and Ryan and Kman there pretty much 24 hours a day. That's where we're at. So take advantage of it. All right. Now, I also want to hear about, Ryan, something else that you posted in ForexAnalytix last night that I think is really important. And so it's so important. I usually don't show people this data, but I'm going to show it today. I want to show you guys some of the options that are coming off today. Ryan, why is this a big deal?
Those options, it's really busy. I mean, I do these every day, so I know, when things are quiet and when things are busy. We've really had a pickup in euro dollar options today, huge amount between that 1140 and down to 1060, over 11 billion. So, and that one you've highlighted there, bang in the middle, and the one a bit below, it's some big expiry. So it can keep the price glued around the strikes going into the cut at 10 a.m. New York. But sometimes, because when you have a lot all the way up and down the ladder, people say options are magnets, but which one is it going to magnetize to? The 1140, the 1120s, the 1080s, but it just means the price is likely to stay around in that range for a bit, barring any big data moves.
Yeah, now keeping in mind, we were at the very end of the day yesterday. We were trading well below 111, and with all this options activity, you got to take that into account. And Ryan updates this information every day, goes through and combs through the data that you can find here on ForexAnalytix. So make sure you guys take advantage of that.
Just quickly to add to that, if you want to know how to trade the option expiries like that, what you want to look for is if it keeps the price out of sync with the others. Let's say ISM data is really rubbish and cable's rallying to 132.5, but euro dollar's still stuck at 111. Then you would think that the options are keeping the price in check. So after the expiry, you might see a little bit of catch up.
And that's there you go. And so you might see that reversion type of trade after the options expire. So really, really, really great stuff, Ryan. And I want to make sure that everybody notes how important this information is that you see here every day, and especially the stuff that can really affect, you know, how the markets trade, especially with all this data that's coming out. Hey, you know, let's look ahead a little bit going into tomorrow. I mean, I know we're going into Thursday night, well, Thursday afternoon, Thursday night, ahead of a really critical jobs report, but we have ISM. What's going to be number one on your mind today as we hit that ISM services data? Kman, what are you thinking right now, especially, you know, coming off this ADP data?
Well, yeah, I mean that it's pretty clear. I mean, you have the headline number, but then the focus is clearly on employment. So you get that employment sub-index, which is expected just to hover around the 50 mark, 50 and a half. That's going to be what the people are going to focus on, obviously. It would be a bit of a potential creating a bit of a mess into the NFP tomorrow if these numbers would come out better than
Strong,
expected.
right?
That would be a bit messy.
Yeah, I mean, and remember, and let's just, I want to pull up a kind of some historical ISM data here, and just so you guys can see it. This is the services data over the course of the last, let's just, you know, call it, you know, the last 8, 10, 12 months. We've had the propensity of missing to the downside. So as Kman pointed out, no, you can see a couple of upside prints where most of them have been on the downside. If you do come in with a stronger ISM data, and it's pretty much our services data has been what's carrying the U.S. economy as it is. But if that data comes in better than expected, that would be a little messy. But let me ask you this before I go over to Ryan. What specifically, what currency pair are you going to be looking to trade out of some of the majors? Or are you going to be trading the S&P on the short side? What are you thinking right now?
I'm still long cable and kind of like it. I'm long gold, and those are the two main ones that I'm having now. Got a little bit of short Canadian versus euro and sterling, but those are not main ones. And for the rest, I'm watching the game and deciding upon what to do next.
Yeah, this cable, I mean, it looks bullish. Now,
Yeah,
okay, I got to ask both you and Ryan. I mean, you guys live in the UK. I mean, labor's. I mean, Ryan, tell me everything's going to be okay in the UK.
How much space have you got to house me and Kman in the next 6 months?
Hey, Blake, tell me everything's going to be okay in the U.S.
Oh no, I can't tell you that, Dale. I cannot tell you
Please,
that.
Blake, tell me
No.
that.
We all
Okay.
have to end up. We can't even go to a Mexican beach nowadays. I think we're gonna all end up in, like, I don't know, Greece.
We'll go to
Yes,
Greece.
we're gonna
All
end
they
up
do
in
is
Greece.
sit on boats and beaches all day long, them lot.
Or we're gonna join Grega in Slovenia. And matter of fact, Grega's here. So before we ask Grega what his opinions are, no, Ryan, no, but seriously, jokes aside, what's happening there in the UK? Because sterling doesn't mind it, or maybe people just would rather have sterling over dollars. I mean, but what's happening in the UK, and what are the growth prospects there?
Well, growth prospects, we'll have to see what they're going to turn out like in the next 6 months. The new government can't claim any credit for any good data in the last couple of months, so it's everything going forward. But we're not going to get a clear idea until we get this budget and we know who's getting taxed and who's going to exit the country and who's going to be well off and better off and worse off.
When's the budget come out?
30th of October, Halloween.
Okay, Halloween. So we've got, that's a long time. In Forex land, that's like 14 years.
Well, we should know most of it before then anyway, because it all gets leaked and dropped and left on the tube for people to read. So we'll know the main bells and whistles of it before then.
Got it. Okay. Well, sterling definitely looks better than it. But it's the shining light in the FX market, at least over the dollar right now. But we definitely have a bull flag developing. I guess if we get much above 132, we got to start looking for those highs once again. Greg is here, and I just noticed he's here. So, like I said, I think most of us are going to go to Slovenia. So, Grega,
Yeah,
do you
you
have any
think?
room in your house for us?
Actually, yes, I have. Maybe in a few years when kids will live even more. So,
Well, hey, we've have a lot moving. Good to see you here today. And Greg is our in-house Elliottician. He also runs wavetraders.com. Grega, what do you see right now as far as the dollar goes? And let's start with the dollar.
or let's start with the 10-year US notes. I just
Okay,
updated on the
let's do that.
dashboard. Yes, earlier today I updated this one. So yesterday I just noticed that we are seeing some very nice push to the downside. If you go to the treasuries, yeah, exactly. So we are breaking out of this consolidation, and I think that more dollar weakness is in front of us. But I'm not really sure about stock markets. We are seeing stocks coming down on weak data and dollar down on cuts expectations. So I just think that the best play for potential trades on the FX is possibly on dollar yen. And now when we have this weak stock prices or just stable around current levels and weak US dollar, I just think that Japanese yen will do quite well versus the dollar. And I'm thinking about breaking these August lows in the next few days.
Yeah, I was looking at this as well, and I actually mentioned this on the trade-off show with Chris Weston last night. Is we have this triangle pattern that we've broken obviously today, and we're capped by the 38% retracement. And I said it earlier this week, and Ryan scoffed at me, rightfully so. I said, I want to try to sell a rally, any rally towards like 150. He's like, you and everybody else. We haven't had data that's given us that opportunity. Matter of fact, we might all be chasing this thing lower, especially, following some weak data. If data continues to be weak, we might be trading back below 142. So where would the dollar yen go in your view, Grega, if that happens?
I'm looking for, if you go to the daily chart, I'm looking there for 140 to be very big support. You can see down there for this wave A. So around 140, I think that's a pretty big level where we could potentially stabilize for a bit, but it really depends on the other markets, of course, and especially on the risk on environment. But for now, until we see stocks moving back to the upside, that they will rebound, I just think the dollar yen will keep pressing lower.
So you think stocks are going to rebound from current levels?
Or or possibly they will stay sideways. I'm not really sure what kind of number we should get tomorrow out from non-farm payroll support for stock markets to recover. I know that we have seen some very nice pullback here, because if data will be bad, then it means that because of recession risk, stocks could continue lower like they did in August, right? Yeah. So if the data will be very, very good, very strong, then maybe there is no reason to cut rates so significantly. So I'm not really sure what kind of data we should get from non-farm payroll support for stocks to rebound.
All right. Well, I appreciate that, Greg. I really appreciate your views. We're going to get ready for the data. As I'm doing this, whoops, that's not what I want to do. Ryan, we talked to Kman just a second ago. What are you looking at today? What's like hot on your radar as far as looking at trade? And thanks again, Greg.
I'm keeping an eye on gold.
Okay.
I'm not long, but
both you and Kman like that, like the shiny yellow metal.
Yeah, I'm thinking I might up a potential break through those highs, 25, 30s. I'd prefer it to come well after all the data, then it'll be something more tangible, I think, rather than a potential data point, fake and reverse move or spike and reverse move. But yeah, it's a bit similar to what I was saying about the S&P the other day when we were up near the highs. I'll get itchy for a buy stop through there as well if we get back up there. Otherwise, maybe a dip to 54, 40, 50 area.
Gold has been very quiet and up, just pegged at the highs. I mean, the range extension takes us almost to 2,600. The range that we've been following, obviously, you and I have been talking a lot about it this last week, and we hit, as Kman pointed out yesterday, we hit 20 or 24.70, like literally on the nose. Well, within about a point, and then a pip, and we've come back into the range. I mean, it's just pegged at these highs, so it's just aching to break out, and weak data might actually do that. So, oh, we're getting real close. Damn it! Oh, here comes the data. What do we got, guys?
Ah, forget it,
Shoot,
mate.
I'm
Nothing
sorry, I'm
special.
late.
Nothing. Initial jobless claims in line. Unit labour costs, the revision for Q2 coming in a bit softer, 0.4%. So that's down a bit. Jobless claims, nothing in there.
Nothing in there. Yeah, we came in at 227, so basically in line. That's the most real-time jobs data that we can get. So at least that's a little bit of reprieve for anybody who's a dollar bull. They're probably looking at that going, thank God, the new euro is not going to go to 150 today, or 110.50, 111.50 today. Gosh dang it. Anyway. But that's not the only data we've got. We've got ISM, which is going to be very important. That's coming out in about an hour and a half. So hopefully you guys have some good ideas. Sorry, Dale, didn't get to you and ask what you were thinking, but
no problem, buddy.
Yeah, we just saw Grega here and had to jump in and grab the Wizard of Waves, as you like to call him. Bring him in really quick. Hey, it looks like Anas is walking around his office. And so Dale, I'm gonna pass it over to you. I just want to make sure I remind everybody. Make sure that you all take advantage of the ForexAnalytix pricing. Thank you all for being here. Remember, tomorrow we will be covering the non-farm payroll live, just like we did here, but we're going to give you, obviously extra analysis because we tend to bleed into the next 30 minutes because we don't have guests on Friday. So typically.
We do
so
tomorrow,
Dale,
though.
Oh, you do? Tomorrow?
Yeah.
All right. Well, they're going to bleed in, but you're going to get their analysis of the NFP anyway. So.
All right. Yeah. Okay. So thank you, Ryan, Kman, Blake.
Thanks.
Thank you,
Thanks, guys.
Dream
Cheers,
team,
mate.
and welcome back to F.A.C.E and us, you handsome devil. How
Good
are
morning.
you?
Thank you. Good morning.
How's it going with you? Before we get started with your what you have to say with what's happening here, can you explain to me the strange situation that happened in Libya? I've never heard of a force majeure or production stopping over an argument or a conflict with a central bank. Is that what was happening in Libya?
We discussed this in a space that is pinned to my tweet today. I think we were the only one who came up with the secret to all of that. Not a single media outlet was able to get this point. Those guys, we have a government in the east, another government in the west, and they've been fighting with each other. And the government in the east was able to shut down all the oil exports. That was in 2020. Then other governments basically intervened, and they created a system where they divide the revenues through the central bank. And it worked. They were fine. There were no problems at all. All of a sudden, a group from the Haftar group, who is the leader of the militia in the east, went to Sharara field. Sharara field is the largest oil field in Libya, and they closed it down. And we were able to get some statements from the guy in charge who said, well, here is the problem. A Spanish court issued an arrest warrant for Saddam Haftar, who is the son of Khalifa Haftar, who is now the leader of the militia. And they issued this because of arms smuggling. And who manages a Sharara field? Repsol. Repsol is a Spanish oil company that is partially owned by the government. So they thought if they stop its operation, they can put pressure on the government, and the government can put pressure on the court, basically to prevent that arrest and eliminate it. That's how it started. That story did not make any sense to us because everyone knows that an oil company cannot affect the judicial system in a Western country. Then all of a sudden, they decided to close all the fields because the Western government removed the head of the central bank. And they started losing about 125 million, or supposed to lose $125 million a day. No one loses $125 million a day because of the appointment of a certain person. I mean, even two brothers can kill each other over that amount of money. It doesn't make sense.
They would, yeah.
And here is what again, I said we were the only one who said this, and it is in the space that is pinned to my tweet. Here is the story. Why the Biden administration contacted them and told them to open the fields and let the oil flow. Well, you can say, well, the Biden administration does not want higher oil prices before the election.
Yeah.
But there is more to the story than that. All of a sudden, the UN got involved, brought in the two parties together on the spot. I mean, it did not take more than hours. And they have an agreement on who is to hire for the head of the central bank, because the previous head of the central bank ran away to Europe.
Okay.
So why the Biden administration got involved? Why the UN got involved? What's the story here? It turns out that...
Sounds like Carney. Carney ran away to Europe from Canada.
So, yes.
Right.
So here is the story. The UN is supposed to vote soon on unfreezing $70 billion of the Libyan sovereign fund that's being frozen in the
Since
West,
Gaddafi?
in Europe and the United States. 70 billion.
Since Gaddafi.
So what happened is...
That happened? Has it been frozen
It's
that
been
long?
frozen since 2011.
Okay, yeah. All
Okay.
right. Yeah.
And the issue here is you are talking about 70 billion. And that under the Libyan sovereign funds, which is under the central bank. So everyone basically wants control of that fund. So yes, you can lose $125 million a day if you are going to get 70 billion.
Got it.
So the issue really is that 70 billion and who is going to get it, how it's going to be, who is going to manage that fund, etc. But here is the sad part of the story, and it's really sad. $30 billion of that fund is in US and West and European banks earning negative interest rate.
Okay. Yeah.
So imagine that, which means that the Libyans are losing $10 to $15 million a day just on that negative interest rate. So the objective of the Libyans right now is really to get hold of that money so they can move that money from negative interest rate to positive interest rate, and they can start making money. Sorry, it's a long answer, but it's a long story.
Anyway. What a convoluted story, man. You know, I mean, people and money, anyway, I believe I understand it. There are so many moving parts to that story now. It's, I'll have to watch the video again, like everyone else. I recommend you listen to this story again. So, technically we had a breakdown in WTI, under 72. It's just a chart. I know, you're not a technician, but this is the kind of a bearish signal that we took out $72. So I know you believe the market is managed. Are we close to the low end of the range, or could we go $60?
Here is the situation. In our main scenario, we assume low economic growth and OPEC Plus will go with its plan as is. If we end up with a recession, then we move from our low economic growth scenario to a recession scenario, which is completely different from the going sideways in prices, because our assumption was, as you remember from the previous show, we're talking about sideways. Sideways basically assume low economic growth because the recession is a completely different scenario. But here is the situation now, because this is very important. OPEC, we have OPEC Plus. OPEC basically 13 countries. OPEC Plus is 23, so it's OPEC Plus 10. And then we have something we call the Group of 8. The Group of 8 are those members who decided to make voluntary cuts in the last 2 years to stabilize the market. Therefore, all those reports in the media from Reuters, Bloomberg, etc., in the last 2 days talking about OPEC unwinding production, OPEC Plus increasing production, that expression is wrong. It has nothing to do with OPEC Plus, has nothing to do with OPEC. It has to do only with 8 countries out of 23. Okay. We published a report last night on this in details on Substack, and we came up with a name for them. We call them the V8. the
I
V8,
drink it.
V4 voluntary cuts.
Yeah.
So the group of V8. So those group of V8 basically agreed months ago that they will unwind the voluntary cuts starting October 2024, and that will be gradual increases over a period of a year. And therefore, they will increase production based on the plan by 180,000 barrels a day in October. Goldman Sachs published a report about a week ago. They ran away with it, and that report is full of mistakes. One of the mistakes basically is they kept talking about OPEC. We passed OPEC since 2016. No one talks about OPEC these days. You want to talk about OPEC Plus? That's fine. You want to talk about the group of 8? They did not even mention the group of 8. They did not even mention the OPEC Plus. When you are an oil analyst and you don't talk about this, you seriously have a serious problem. The other issue is they ignored completely the compensation. What is the compensation? We have 3 countries that violated their quota or exceeded production above production targets in the first 7 months of the year. That's Russia, Iraq, and Kazakhstan. Now, those countries have to compensate for what they increased in the past, and that will be subtracted from the 180. And Goldman Sachs basically ignored that completely, and they ended up bearish, and they contributed to the price decline you are talking about.
Interesting.
So their assessment is completely off because we have the compensation. Now, talking about the compensation, those countries basically dragged their feet because they were trying to play around the system. But the Saudis are not going to like that. So what happened in recent days is very important. We believe that the threat of a price war is real.
Okay.
And it's real because we've seen it between October 7 and between March 7 and March 9 in 2020 when they brought the Russians to their knees.
Yeah.
Okay. So this is real. And what we've seen that once it seems like the threat is made, all of a sudden Russia is in compliance, and all of a sudden the Iraqi government is in complete panic, trying to cut production and forcing the Kurds to cut production in the north. We've seen Kazakhstan going for full maintenance programs to lower production. In our report that we published last night, we showed all the data and we showed the exports declining of all those members.
So you think we're mispriced here?
Mispriced, and the media basically really misreported the facts. So here is the other issue that is very important to this. If you look at various scenarios facing the group of 8, because yesterday the media was talking about some discussions of delaying that increase in production. If you look at it from various points of views, and you look at it from a game theory point of view, the ultimate outcome for them is the following, is to have Russia, Iraq, and Kazakhstan in compliance, and then they go with the unwinding or the phasing out of voluntary cuts. So they go with the 180 increase on paper. Then you take the production, the compensation from Kazakhstan and Iraq, we end up with about 30,000 oil. 30,000 is nothing in the market.
Yeah.
And that assumes that all the other countries will increase production, which is not true. Goldman Sachs report assumed that there will be no maintenance for a year. There will be no technical issues for a year. That's a complete nonsense.
Did you dig up how many contracts Goldman was short before they released this information?
I don't know.
That's just the way my mind works here. Do you think they do that? You think they do that in us as they position themselves ahead of news? Traders will use every advantage possible.
Look, I'm going to tell you a story that I never said before. I'm not going to mention the country. I'm not going to mention name, but I'm talking about an oil producer with a senior official, and I met the son of that official. And I told him, what do you do? And he handed me his card, and he was an oil trader.
Okay. Got you. All right. So trading opportunities. So, for me, to won't be interested in buying crude again. I see no sign of a bottom yet, but back above 72 would make this look like exactly what you said, that it was misinformation and that the market didn't belong here. And back above 72, you have a breakdown failure.
Let me explain one point, because in our report, we indicate we are talking about kind of a dumbbell situation here. You either get recovery in prices to where we were 10 days ago, or you get prices toward the $40. You don't get something in the middle, because it's either this, either compliance or a price war. There is nothing in the middle.
Okay. Yeah, there is you know, people have been talking 40 long-term targets for a long time. You know, and you know, I just want to put that in perspective, because I'd be backing up the truck if that ever happened. And you could see it on the monthly, that as bearish as people are, you know, from the COVID low, all we've really done is correct this this huge run that we had into the war. COVID low, Ukraine, and then the initial sell-off, and we're just moving sideways here. So 40 is the new -10 now, right? Because of inflation. Back then we didn't have we had deflationary problems, so it went negative. And now if we have some, go ahead.
I just want to explain this point, because what matters to the market as a minimum is really the marginal cost in the fields. And that's really what determined that minimum. And the marginal cost in the field basically has been increasing. However, that does not mean the price will not go below it. It will go below it, because I tweeted yesterday a very important tweet replying to some analysts who missed the point on this. Natural resource economics is completely different from the economics we learned in Econ 101. Natural resource economics, like oil, is different from manufacturing cars or TVs or microwaves. And everything is different. And if people keep treating oil like a manufactured good, they keep missing the point. So some people were saying, well, the Saudis are losing market share, and that's stupid. Look, the US is increasing production. Well, look, in natural resource economics, the Saudis are preserving their natural resources to the future. The US is exhausting its resources. Guess who is going to win in the long term?
Okay.
That's natural resource economics.
Okay. All right. So you preserve your asset instead of just blowing it out so you get cheaper prices politically, give you an edge. You know, that brings me, I do want to touch on nat gas, but that does bring me to what you think oil policy is going to be here in the U.S., depending upon who gets elected, even though Kamala says that she has flipped on fracking. I'm wondering what you think is going to be the effect, since we're already producing quite a bit, right? But regulations could be loosened up to get natural gas pipelines in and fracking going again. What do you think under each administration?
There is one fact that we have to deal with. When the oil companies do projects, they do it for 25 years to 50 years.
Okay, like the Chinese do it for 100.
While the elections are every 4 years.
Right.
So this conflict basically is a problem for the oil companies. For example, when gasoline prices increased and the Biden administration relaxed some of the environmental regulations so refineries can increase runs and production, refiners did not like it. They said, look, I spent billions of dollars to meet the environmental regulations, and now you relax them, and you want me to change again? So the oil companies, the refiners, etc., they don't like those changes every 4 years. And therefore, they are not going to respond strongly to these changes. Okay. So that's number one.
Interesting. Okay.
Number two, I think the Trump is going to be in trouble, not Kamala Harris. Trump is going to be in trouble because he is coming to office with U.S. oil and gas production and LNG production at its highest ever. Can he maintain that? Over 4 years, many people doubt that. And therefore, he is in trouble because of that. He cannot increase it above that. And if they scrap the Inflation Act, if they scrap that, let's say Republicans win the 3 houses and they scrap that, that means all the government subsidies to renewables and
Goes away.
electric vehicles, etc., goes away. What that means? That means immediately an increase in demand for oil and gas.
Right.
An increase in demand for oil and gas means prices will go up. Trump cannot fight that to keep prices low. The other logical comment here is if Trump basically succeeded in lowering prices through the help of foreign countries or others, why you and I are going to invest? Why oil companies are going to expand if prices are low? So he is really more in trouble than Kamala Harris in this case. The third point is extremely important. LNG is now an integral part of the U.S. foreign policy and the U.S. war chest. When we talk about war, we are talking about trade wars and actual war. Look at Ukraine and Europe. And anyone who wants to come to the White House, they cannot do anything to fracking because LNG is part of national security right now.
Interesting. Okay. Do you have a different view on what's happening here in natural gas? I like the look of what it's doing here. You know, we get back above 220. That's going to look pretty good to me. Is it weather related? Is it Europe? Is it Europe that might have problems with natural gas that they didn't last year because they had a mild winter? What do you think is behind what could be a bull move in nat gas?
We publish a weekly report on natural gas and LNG, and then we publish a tracker of natural gas in Europe every month, which is going to be released today, by the way. And the issue here is we do have to separate U.S. market from the rest of the world. We are bullish on the rest of the world. We are bullish on LNG. The story of LNG is just an amazing story. And we have a big conference coming up in a few days in Houston, which is the conference, basically. It's an international conference, which is GasTech. Just a massive conference. Anyway, the issue here is this, that in the United States, we have a problem where natural gas comes with oil from oil wells in shale plays. When oil prices go up, those producers will dump natural gas on the market at any price, even if it is negative, so they can take advantage of revenues from oil. That's really the problem we have.
Okay.
And natural gas producers in the Marcellus and others, those are producing gas only. Even if they cut production, they cannot solve the problem because the producers in West Texas and others are just dumping the gas at any price. And that's really the issue right here. But in our report, basically, we indicated that demand, we predicted this, and we were spot on, that natural gas demand, especially with the heat wave in Asia, is going to increase demand. It's going to divert shipments from Europe to Asia, and that's what happened.
Okay. Anything that we should know as far as effects of what's happening in the Middle East?
Well, there was a story a couple of days ago that the Houthis attacked an oil tanker, which is a VLCC, which is one of the largest tankers in the world, called Amjad. That did not make sense to us. We questioned that from the first moment, why the Houthis would attack a Saudi ship. But if they attacked it, well, they did. And the reason why we believed it at first, because it came from the U.S. Central Command. It did not come from the media. The U.S. Central Command basically said this. And then later on, we found out that there was nothing wrong with the ship. It was another ship that's been attacked next to it. And then we questioned what the Central Command basically looked at. And it turns out a very simple procedure. If the captain calls and says, or send an email, said, we are under attack, they assume that the ship been attacked. And the area was under attack, so probably the captain of Amjad said something. I posted a tweet this morning with a map where Amjad was, and it is very close to its destination in Egypt. It will arrive late this afternoon. So definitely there is nothing wrong with it. So that's number one. Number two, ExxonMobil released its outlook to 2050 last week. And I don't know how much time we have left, but the idea here is please ignore this outlook. And the reason why ignore it, because this is a PR outlook, has nothing to do with investment, has nothing to do with trade. Exxon basically has several scenarios. They take the scenario they want to invest according to, and that remains secret. No one knows that except the officials of Exxon. And then they choose one for public relations to please the environmentalists, to please certain politicians, at the same time send messages to politicians and others. And that's what they did. And if you look at the details of it, for example, they have a scenario where it is replying directly to the IEA and the UN. Well, if you are talking about a true outlook, you don't reply to the rhetoric and the propaganda of the IEA and the UN. So it is clearly a PR. So what they said basically is, if we today stop investing, the decline rates in the field will be 15%, and therefore oil production is going to drop substantially in the coming years. So that's number one. Number two, they expected oil demand to plateau in the mid 30s and demand basically to be around 100 million barrels a day by 2050. Well, we are by next year we'll be at 107. So that's number one. Number two, if you look at their assumptions, which is kind of a hidden assumption, it's kind of very weird, because for the last 5 years we've been saying that we need at least 700 million electric vehicles, and I said this on your show before. We need at least 700 million vehicles to have 100 million by 2050. We're the only one who is saying that, and now ExxonMobil is saying we need at least 900 million.
Wow.
Here is the issue. We have only about 50 million right now. In the next 25 years, we need to add about 900 million electric vehicles, but this is not the story. The story is, in the next 25 years, the fleet is going to be exchanged at least 3 times, which means that I need 1.4 billion with B, electric vehicles in the next 25 years, and that's impossible to happen. And therefore, oil demand is going to grow. Oil demand is going to be higher than any forecast right now.
What a great interview once again, Anas. I just posted your handle on X. Anywhere else you want people could go to check out your research. If you're a WTI, you're an energy trader, you have to know what Anas knows and
yes,
shares.
so we have 2 publications. We have the Daily Energy Report, both of them with subscription, and for institutional investors, we have the newsletter. The links are in my bio on Twitter.
All right, Anas, thank you so much. How long have we been doing this together, my friend?
It's been a few years.
All
and
right.
I always enjoyed it.
So I look forward to seeing you every quarter, and appreciate you being able to explain complex things so that we could all get it, and appreciate that you have been here all this time edifying our community about the
Thank you.
lifeblood.
If you don't mind allowing me just to mention one thing. In the Daily Energy Report, we do something that no one else does, which means that we take the news items and literally explain to people things that no one discusses. Say, this news is fake. This news, for example, is irrelevant. Or this news, here are the implications and what it means and why they said it. So that's for the Daily Energy Report, and I think people will enjoy that.
That's more important than ever, because I think that we've reached a point where a lot of people, and I'll admit it, sometimes I don't know what to believe anymore. Anas, we've gotten to this point with so many different narratives and conspiracy stories, and just people trying to manipulate our minds with information, that for you to curate this information is so important, that you have someone that's an expert that could see through the bullshit. Pardon my French.
Thank you.
And anyway, Anas, I appreciate the relationship with you. And till next time, it'll probably be in December. Inshallah, my friend.
Inshallah.
Anas El Haji, everybody. I posted his handle in text. Follow him and become more knowledgeable about energy. It can't
Thank you.
not happen if you read his stuff. That's a wrap. Thanks again, buddy. And you could join the team in 15 minutes on the Morning Edge. You're welcome, guys. Have a good day in the market. Looks like the dollar's trying to bounce here. And I'll see everyone. We'll wrap it up. Hey, Sung Yup, be here tomorrow. Trade the NFP live with us. Best place to, get some real good input to the reaction of it. Hasta mañana, Laura. See you guys. Oh, yeah, I forgot. Don't just count your oil wells and wheat silos. Count your blessings. Adios.